Broadcasting from the 72nd floor of First Canadian Place in the heart of Toronto's financial district, this is #Finance, the podcast that profiles innovative entrepreneurs and thought leaders operating in the public markets. Presented to you by the CSE, the Exchange for Entrepreneurs.
I want to welcome everyone to which is an encore performance. We did this yesterday. Myself, Richard Carleton, the CEO of Canadian Securities Exchange, Jason Paltrowitz, Executive VP at OTC Markets based in New York City, and myself, James Black. I work at the Canadian Securities Exchange, and we're here in Davos today hosting this encore performance of the public market side of the cannabis industry. And why are we the ones talking about it? Well, as alluded to in the last conversation we just had, many fortunes were made and lost in the public markets in the cannabis sector because our marketplaces were basically the funnel towards moving multi-billions of dollars into this industry, some of which is being put to work quite usefully still. So I think what we want to start off that, and as a sort of bridge from the last conversation, let's take a viewpoint from where the last 6 months has put us to this stage today, which is an industry that's took a few lumps in the public markets after a couple really euphoric years of growth and other positive developments, namely basically the start of a brand new industry, a multi-billion-dollar industry. So without further ado, I'll let the gentleman introduce himself a little bit, and then we'll talk about how you see this industry moving forward from the last 6 months. You can disagree with me if you think it's in shambles.
I'll introduce myself first. Yeah. So as you said, Jason Paltrowitz, Executive Vice President of OTC Markets Group. We are the largest market for publicly traded cannabis companies. So you hear a lot of things in the last 2 days. A lot of guys will tell you that you can't be a publicly traded cannabis company in the US because of federal regulation. That's clearly not true. On our premium QX market, we have 71 companies that last year totaled $11 billion in dollar volume. On our venture market, we have another 150 cannabis companies that are publicly active, as well as even more on our lower markets. So the public markets have really served the cannabis industry well when there was no other way to raise money or there was no other interest. Unlike our friends at NASDAQ in New York, we are not an exchange. We're actually what's called a super ATS. We are fully regulated by the SEC and FINRA, however. And because we're a super ATS, it actually allows us to be a little bit innovative and creative. So while US major exchanges might shy away from things like cannabis or blockchain, we are creative, innovative, and entrepreneurial. So we listed the first Bitcoin trust in the US and the Ethereum trust and those types of vehicles, as well as obviously the cannabis companies I've talked about. I'm a firm believer. My entire career has been in the public markets. JP Morgan, Bank of New York. I was on the board of OTC Markets and took our own company public. I am a big believer in the public markets, and for all the guys that love to talk about the private markets, I was interviewed on Cheddar recently, and part of it was WeWork. And WeWork is a great model for why sometimes the private markets might not be the best place. Nothing really against the private markets, but public markets create one thing that private don't: transparency. And being a public company forces you to be transparent, and I do think sunlight is the best disinfectant. Then from an investor point of view, good corporate governance and good public companies kind of have to tell you things. And from an investor point of view, knowing things allows you to make investment decisions that I think probably are easier to make.
First of all, who are you?
Who are you?
Yes, it's a pleasure to be in Davos again this year. I'm Richard Carleton. I'm the CEO of the Canadian Securities Exchange. Many of you might be aware that we embraced the cannabis industry back in 2014, early on, when other exchanges or public market facilities were reluctant to work with the industry. We listed many of the original Canadian LPs and saw them in many cases prosper, and within a relatively short period of time became the focal point for public markets investment in the cannabis space, not just in Canada or North America, but globally. We currently have approximately 180 public companies in the space. Approximately 80 of those are companies which are operating in the United States directly, because as Jason said, those companies have been shunned by the national markets in the US. NASDAQ and the New York Stock Exchange. And Canadian investment bankers and the Canadian capital formation system has actually tapped into not just investment from Canada, but increasingly from the United States. Last year, approximately $3 billion was raised by public cannabis and hemp companies on the CSE. 50% of that money came from the United States. The vast majority of it conducted through private placements with a lot of private equity, family office, and hedge fund investment. Canada contributed about 35% of that money, principally but not exclusively a combination of retail and private equity. And we saw, even as the year expanded, 15% of the money was coming from overseas, with Germany and the UK being the two largest sources of investment. Again, the kinds of folks that we've met at Davos the last couple of years, family offices, private equity investors. We think it's really important that, just from a market dynamics perspective, whether it's secondary market trading or valuations or capital formation, that we work with the industry to broaden the range of, I see our friend is coming back.
I'm just smoking, don't mind me.
Okay. That's legally, it's 1% THC plant and 17% CBD apparently, so it's all good in Switzerland, we're not breaking any laws. In any event, we're working with all of the stakeholders in the industry to see what we can do to broaden the range of investors in the space. The previous presentation, you can see some of the tension that exists between private market investors and the public markets. And it's good, it's healthy, it's creative tension. There should be a competition for capital to drive down costs for the consumers of that capital, to provide different types of vehicles for funding the operations. But as Jason said, ultimately, the superior liquidity option and from a valuation perspective is clearly in the public markets.
So can I just drive into that for a sec though? Not to cut you off, but there has been some perceived damage. There's now lawsuits and class action lawsuits coming through the pipeline for all these losses in the public market. What do we have to do together collectively, or is it even our job to continue to do something to get confidence back into the market, the public market for cannabis, and not lose the business to private equity interests?
Stocks are up 25% as a whole in the last 6 weeks. So half the damage has already been undone, basically. And what people are now looking at is, rather than just say it's a weed co, it's going to go to the moon and whatever, we're actually seeing bottom-up analysis drive the price performance. So companies that have captured greater portions of the value chain, and generally speaking, they're the multi-state operators in the United States. Yes, there's a cash crunch, and not all of them are going to make it, for sure. But we're seeing the emergence of recognized brands. We're seeing more and more innovative solutions at the retail level in a variety of states. And most importantly of all, more states are coming on board so that the companies which have secured licenses in the various jurisdictions that are coming online are in fact hitting their benchmarks in terms of revenue growth and a trajectory towards profitability.
So just to answer the other part of your question about some of the class action lawsuits and what can we do, or that it's harmed the industry, that's actually also a double-edged sword, right? I mean, companies that commit fraud. And if these companies have committed fraud, if they've misstated earnings, if they've said things that are materially incorrect, then you should be sued, right? You've committed fraud, and Enron committed fraud, and there's a long history. But again, the public markets are the markets where that kind of comes to light a hell of a lot faster, only because of the transparency requirement, right? Companies are required to report, and so there are more eyeballs on the reporting, and there's more of a view taken. Companies that stay in the private market can kind of hide that stuff a lot longer. Again, OTC Markets, I was on the board when we were a private company. A shareholder would call every once in a while and would ask us what we were doing.
What were you hiding, James?
It was interesting. We would get those questions, and when we went public, we thought all the people that asked us those questions were immediately going to sell once there was a public market to sell. They all stayed. They're all still investors. It was that ability to see a public price and our disclosure quarterly that kind of was that comfort blanket that kept them in the stock. And I think public markets provide that in a way.
Yeah, so everyone holds the public markets to a very high standard in Canada and in the US and elsewhere. Now that we've kind of gone through the cyclicality a little bit, Richard and Jason, everyone likes to trend spot. I mean, everyone comes to Davos and wants to kind of predict what's going to happen in the next year and sound smart. The next year they come and it happens. But right now here, we had some ideas thrown here on the stage. Maybe we can expand on that. Yeah, is the China thesis going to play out in the public market? Is there a retail play or a brand play that, last year we were sat here, we discussed what would it take to create a global cannabis brand. We're here later and there still isn't one. I'm going to say that rather emphatically. There still isn't a Coca-Cola of cannabis or anything like that. So do you think, other than those trends, that you can comment on whether or not you think they'll play out, but is there anything else that you think is going to continue to help lift the market other than just the base of saying, well, yeah, we're going to hold people to a higher standard and the profitable ones are going to come through? Or are there more macro trends that we're going to see that help lift the industry?
Boy, I have a lot of thoughts on that one. The first one is, there isn't going to be a global cannabis brand because it will only be a consumer packaged good, in all likelihood, in Canada, the United States, UK, Australia, and New Zealand.
But there's name brand pharmaceuticals.
Which is actually, the Anglosphere, I guess is the polite way of describing it. That's the only place that's going to be legal for recreational. There'll be something like Uruguay. I'm sorry, I left out Uruguay. But, the reality is that those jurisdictions is going to be a consumer products packaged goods play. And given the way the regulations are currently set out for advertising, for importation across boundaries, and for the ability to optimize the logistical chain and production and so on, we are a long way away from that actually happening. So those are going to continue to be local markets. Yes, there'll be some cross-pollination, but I don't see that kind of development yet. There'll still be local brands and very local markets, I think. The rest of the world, it's a medical and a wellness play that is going to proceed at different paces in different jurisdictions. We know there's a lot of interest and excitement in the European Union. There are a lot of rules, and it's going to take a while for the products to get through the regulatory regime, to figure out the production systems, optimizing logistics and so on. And again, it's not clear that given the differing regulations that you're going to have a consistent set of guidelines and packaging and content rules and so on. So again, it may be, it will be slow to develop, and it may be that, again, it'll be more local than looking at, say, the European Union as a whole. And just on the China thing, I'm deeply skeptical, given how protective national governments have been about production of all kinds of farm goods, as well as security of the supply, that China will be in a position to export significant quantities of either raw product or extract to the rest of the world anytime soon.
Fair enough.
Yeah, I would agree with most of that. I think last year we were here, and 2 years certainly before the 2 years prior to that, the exuberance in the space was palpable, right? Everybody thought this was going to blow. I said it yesterday, very reminiscent of the internet bubble, right? Everybody was getting money, everything was going to be great, everybody was going to buy everything on the internet, and all these companies, pets.com was going to make you a fortune. It was like that 2 years ago. I think we've all come back to earth. I think we're all a little more rational. I think this is going to grow out like a traditional business. I think one of the things you see in the cannabis markets now is it's becoming just more like a traditional business, although a non-traditional product. So I agree with everything Richard said. I don't think, to your question, next year we're going to be sitting here and what is going to change? I don't see any major change.
Catalysts?
I think governments are going to gradually continue on a snail's pace. I think in the US and Canada, I think the last panel said it, you're going to see a lot of consolidation. There's going to be M&A. There's going to be winners and losers. But I think the macro arc is going to be a much slower pace, both on the recreational and the pharmaceutical side. So
are the public markets, and I know you guys were kind of discussing this, are they still going to be a go-to tool for startup cannabis companies? Are we going to see more influx of new cannabis entrants in the public markets, or did we hit our peak on that and everything else now is just going to play itself out as you said, we see consolidation and maturity of the industry?
And of course, the answer is it depends.
You're not an accountant, you're a lawyer. Come on.
Well, the public markets are a good place for companies that have a substantial risk profile to raise startup capital. Other companies which maybe are more, I want to say, intellectual property heavy, research oriented or whatever, may well find that there's an appetite from the private markets to support those stories, and the public market is a subsequent exit or some kind of trade sale or whatever, which is, say, a more traditional biotech or life sciences type trajectory. So again, I think it's not a case of it'll be one or the other. The private markets and the public markets will continue to work in tandem, but they will normalize into their regular roles, which is, as I say, the higher risk and higher return opportunities will likely be in the public markets, and you'll see again more private equity support for early stage companies with a potential later opportunity to go public for liquidity and valuation purposes.
Yeah, I would assume that 3 or 4 years ago we didn't have angel investors in the cannabis space, and now we do because they've made some exits and they're ready to come back in with both feet to test.
Absolutely, there was no such thing as a REIT that was looking to acquire real estate assets from the multi-state operators in the United States. There was no opportunity for them to raise debt capital in any way, shape, or form. Inventory finance, supply chain, all of that was simply not available. And all of those vehicles are in the process or have already been established. And again, it's changing the dynamics of the capital requirements to build these companies.
Yeah, and so Jay, I'm actually going to lead you into another realm of this that is sort of a spin-off of that is tipping point. Catalyst for the industry potentially being full deregulation in the US, and then obviously more banking acceptance in the US. Those two factors seem to be the two developments that the world is waiting for so that, your competitor exchanges can then jump in and a whole new world potentially opens up, which, I don't say it would, but maybe. Yeah.
Look, I also don't think there's been a lot of talk even today. I don't see it being fully federally legal next year. I don't see the SAFE Act passing next year either. However, I don't necessarily, yes, that would be a great catalyst, but to the points that Richard and I have been making in a business where there could be nothing, between CSE and OTC, we found a way to take how many companies public to finance them. They're still getting funding. And so you don't necessarily need these big movements of government and the SAFE Act. You're seeing states being able to deal with kind of their banking issues. You're seeing innovators and entrepreneurs and new ideas and new businesses stepping in to facilitate those things or to help to facilitate those things. And so I think the business will innovate within itself at maybe more of a snail's pace, but to make up for that lack of kind of that big bang that you're going to see.
Okay, and is there any messages you guys want to send to the global audience here today and in Davos around lessons learned over the first 3-4 years capitalizing the cannabis industry? I mean, you mentioned there's now an attention being paid to profitability and less speculation, but any wise words that we can take to any of these entrepreneurs or investors that as we see more global influence on the industry
What's funny to me is we're talking about cannabis and there's more attention being paid to profitability. That's actually a theme across the entire market this year. Again, I was being interviewed about WeWork or the IPOs in 2019 and what the IPO outlook for 2020 will be. That's the theme, right? People, the unicorn days maybe might be over. People are actually looking at, will you make a profit? Do you have a path to profit? Not just about what could be. And so I think as I look at the cannabis markets in 2020, it's becoming just another sector in the capital markets, which is actually kind of cool because we were there from the beginning. But people are looking at it in a very similar way that they would look at WeWork or something similar. It will be about profitability. It will be about business plan. It won't be about, maybe one day China will open up, so let's just throw all this money in because it's going to be this big thing. People are being a little more rational in the investment.
Anything to add, Richard, or I could definitely give you more ammunition here.
I don't know. I will share a quick story. I was in Beijing a few years ago, and I was taking one of the underground paths into Tiananmen Square, and somebody was smoking weed in there. I thought, wow, you really... What's the penalty, Phil?
Actually, in Shenzhen, it's next to Hong Kong, and the weekend, Friday, Saturday night, you'll find a lot of places that actually.
That's the spot. Friday, Saturday night. Okay, you heard it here first.
You can smell the weed coming from Hong Kong and Shenzhen. That's. But no, the. I think one of the other trends that we have is there are a lot of really interesting companies which were contemplating going public in 2019, who held back both because of the concerns about the valuations that they were seeing, as well as obviously, as sentiment, which is not entirely borne out by our numbers, because as I say, $3 billion is $3 billion. It was raised by companies in the industry on the Canadian Securities Exchange last year. But certainly, money was a lot more particular and more challenging to raise, for sure. But I think there are, again, when we look at what we may see this year, is that valuations are improving. There is more sanity that has, I guess, I don't want to say it's returned, because we actually haven't seen sanity yet in the valuations of the market. But I think we are going to see some very good, solid, well-managed companies that, in fact, do take advantage of the public markets this year to provide that liquidity then for the early stage investors, and as a platform for further capital formation, whether it's using the currency of the public capital to do acquisitions or otherwise raise further growth capital. And again, as I say, one of the other healthy trends is that for companies which are integrated producers, extractors, logistics, and right to retail, the seed to sale folks, there are a lot of different vehicles now for them to reduce the capital intensity. Again, whether it's forms of debt financing or, as I say, not having to carry real estate on the books through transactions with REITs. Now, what I will say is, again, as you would expect under the present situation, the folks that are behind the REITs are demanding some pretty aggressive pricing from the owners of those assets at this point, which is to be expected. But again, it's just the pace of innovation in the space is, from a financial engineering perspective, is very impressive.
Yeah, and it was suggested in the previous panel that there might be one of the former market darlings. This could be the year one of them just shutters or closes down or completely gets obliterated. Is that somewhat sense? Yeah, okay. Would that be good for the industry, or is that just apocalyptic?
Absolutely.
Okay, I wasn't sure about that.
No, absolutely, because again, I mean, the folks that to this day are still spending money G&A like drunken sailors are not providing any credit to the industry as a whole, and it does inhibit a lot of investors when they see that kind of bankruptcy. So yeah, washing those folks out, that's all part of the life cycle.
The natural life cycle of the public markets.
Absolutely.
Yeah, absolutely. Final thoughts, guys, because I know we're up against time. Any final thoughts? Any contentious points from the private equity?
2 hours like we did this
No. No. And I will add, this content will be available digitally. It'll be available through Cannatech and ourselves at CSE on our YouTube page, CSE TV, and #Finance, which is our podcast. But Jay, any final points or any parting thoughts? This might be it for Davos for you.
I know. I think, again, the public markets serve an important function, and I think like any investment, and I think it's been said more than once, right? It's just like any investment. You really have to look at who's managing the businesses. You have to look at the business plans. You have to believe. What I think we've seen in the last couple of years and what we talked about yesterday, and what's refreshing to see, is the professionalization of the publicly traded cannabis companies, the one that will succeed. Bringing in the right management team, understanding public disclosure and how to be transparent, understand reporting. Learning how to be public is, you don't wake up with it. You have to learn it on the fly sometimes. But I think you're seeing companies really come to grasp and understand what it means to be a public company and your obligation. I think that will continue, and I think that will be helpful to the industry as a whole.
Well said. Any parting thought? You've said many things, Richard, but any final thoughts?
Yeah, that's right. I'm not going to be welcome back in China anytime soon, I guess. So.
No, Phil's going to bring us over. It's fine. Yeah, we're good. We're good.
But no, again, just echoing what Jay says, I think not only just the companies, but it's gratifying to see that there's more professional investors also in the space, which I think is really important. And the kinds of investors who are really going to hold management's feet to the fire in terms of their conservation or preservation of capital, as things have been as these companies have spent a lot to get where they are and now need to be more disciplined in their stewardship of that capital to get to the promised land of at least cash flow positivity. But as I say, I think one of our key areas of focus, and has been, but moving forward, is going to be working with a broader range of institutional investors to get them over the stigma of investing and supporting the space. And I think it would be healthy for everybody to, again, have more professional investors in the sector and able to supply their expertise to provide optimal trading and valuation purposes for the issuers.
Cool. Well, we can end on that note. Thanks so much, guys.
Question?
Come around ahead.